Hello everybody, this is Lara with your weekly video for US oil for the week ending Friday 16th of December 2022. I'm recording this week's video a little bit early before New York's closed, so I'll have a look later on and see if volume, once the session's complete, if that changes the analysis, and I'll post any updates and comments underneath the post. But for now, it looks like oil is going to have a little bounce to end next week for a second wave correction. I'm looking out for it to find resistance about the 0.618 Fibonacci ratio or about the upper edge of an Elliott channel, which I'm drawing on the daily chart. When that's done, I expect a third wave down to continue. The target for the third wave down is 46.33. For the alternate, if we see a new high above 93.78, that would indicate the main wave count less likely. The alternate is more likely. If that happens, the target for upwards movement to end would be a zone from 116 to 105.57. Elliott wave analysis first, classic analysis last. Both my Elliott wave counts see cycle wave 1 over here as a 5-wave impulse and cycle wave 2 beginning. This first wave count has a higher probability because it sees cycle wave 2 as a zigzag, and that is by a very wide margin the most common corrective structure for a second wave, and it would see cycle 2 get deep enough to find support at the upper edge of this channel. Here's the lower edge of the channel, here's the upper edge of the channel. It's drawn on the monthly chart and copied over here to the weekly chart. So Elliott wave is fractal. If you haven't viewed the monthly chart already, I link back to it at the start of every week's analysis for you. There's text charts and video just like this. This trend line from the monthly chart found resistance here, broke through, found support, another back test of support. I think this is an even bigger back test of support in coming months, and I expect eventually cycle 2 may end when price comes to touch this trend line, or intermediate 3 could end there. Could see a bounce for intermediate 4 and then a final test for intermediate 5, so it could have 2 tests of this downward sloping support line. Within primary wave C, if intermediate 2 is incomplete and it continues further as per the alternate daily chart, then it may not move beyond the start of intermediate 1 above 123.68. And cycle 2 may not move beyond the start of cycle 1 below 10.24. Let's take a look at the first daily chart where the low of intermediate wave 1 is this point down here. So here's the high of primary B. Let's go back to the weekly. The high of primary B, this high at 123.68, is this point up here on the daily chart. Within intermediate C, within primary C, intermediate 1 and 2 may be complete, and intermediate 3 may be continuing lower. Intermediate wave 1 subdivides as a leading contracting diagonal. Intermediate 2 subdivides as a double zigzag. Intermediate 3 may only subdivide as an impulse. Within it, minor wave 1 may be complete at the last low, and minor wave 2 may be a small bounce to end next week and find resistance at the upper edge of the channel. It may be unfolding as a zigzag. This channel is new, it is an acceleration channel. Draw an acceleration channel from the start of the first wave to the end of the second wave, place a parallel copy on the end of the first wave. An acceleration channel may show where lower degree subsequent second wave corrections find support or resistance, and so here minor 2 may find resistance at the upper edge of the acceleration channel. When the lower edge of the channel is breached by strong downward movement, that's an acceleration of downward movement. That's why it's called an acceleration channel, and that's your confidence that it's a third wave unfolding. The target for intermediate 3 remains the same. It will reach equality in length with intermediate 1 at 46.33. That's the Fibonacci ratio I'm using for the target because it fits with support at the upper edge of the channel on the weekly and monthly chart, and it also fits with a rather shallow intermediate wave 2. There are a couple of problems with this wave count though. Intermediate 2 is relatively shallow, and second wave corrections following first wave leading diagonals are commonly really deep. So that's the first thing that reduces the probability of this wave count. The second thing is intermediate 2 is a double zigzag, but the second zigzag of minor y has barely moved beyond the end of W. It's hardly achieved its purpose to deepen the correction. This doesn't really have a strong counter-trend slope, this correction. Well, it does for this part, but this is all just sideways. That further reduces the probability of this wave count because double zigzag should have a strong counter-trend slope. The second zigzag usually ends reasonably or substantially beyond the end of the first. So for those reasons, I would judge this still this week to have about a 60% probability, and this alternate about a 40% probability, not quite even. This is still, I judge it to have a lower probability, but it is absolutely a valid wave count and resolves those problems in terms of Elliott wave. For this wave count, intermediate 1 still seen in exactly the same way as a leading contracting diagonal, and now intermediate 2 seen as an incomplete expanded flat. Expanded flats are common structures. They are labelled A, B, C, and they subdivide 3, 3, 5. There is no rule for the maximum length of a B wave within a flat, but there is a convention. When it reaches more than twice the length of wave A, the idea of a flat should be discarded based upon a very low probability. There is a common range for B waves within flats from 1 to 1.38 times the length of wave A. Here, minor B is 1.36 times the length of A, nicely within that common range for this common structure. So this wave count would see intermediate 2 relatively deep, which would fit common behaviour following a first wave leading diagonal. This wave count would also see intermediate wave 2 an expanded flat. That's a common structure, just not as common in a second wave position, and it resolves the problem that the main wave count has of seeing a double zigzag over here where the second zigzag didn't really deepen the correction. So in terms of Elliott wave, this wave count actually has a better look, a better fit, but the main wave count has more support from classic technical analysis. So it's really important to understand my judgment is 60-40. This wave count is absolutely valid. When intermediate 2 is over, this wave count still expects an intermediate degree third wave down, and the lower edge for cycle wave 2 is, or the lower expectation for support, is still the upper edge of that channel on the weekly and monthly charts. Intermediate 2 may not move beyond the start of 1 above 123.68. Target zone remains the same as it has been for a couple of weeks now, at least since last week. Classic analysis. Why am I judging that main wave count to have a bit more support? Volume is pushing price lower. On balance, volume is bearish. ADX tells us there's a downward trend. RSI is not oversold. This weekly chart is bearish. We should assume the trend remains the same until proven otherwise. This downward trend is not extreme, and there is definitely a downward trend with push from volume. So this chart supports the main Elliott wave count. At the daily chart level, this upward movement comes with overall declining volume. Again, this looks like a counter-trend movement. This supports the main daily Elliott wave count. ADX is declining after telling us there's a downward trend, but it won't take much at the daily chart level for it to increase, and there's a long way to go. If it does increase again, a long way to go before the trend is extreme. RSI, money flow, both in neutral territory, as is stochastics, quite a ways to go before they reach extreme. So, with upward movement having declining volume and also declining range, this indicates weakness. This looks like yet another counter trend bounce. Now, it may move a little bit higher as my main daily count expects it to, but overall I expect it is most likely a counter trend bounce from looking at the technical analysis charts, and that's why I judge the main wave count possibly about 60% likely, despite the alternate having a better fit in terms of Elliott wave. That's it from me with your oil analysis this week. I hope everyone's looking forward to an awesome weekend.